All right, everybody, a very good morning to all. Let's quickly take a look where we are right now as a sentiment point of view as we head to the US cash open. It is nice and early, 9:44 a.m. Eastern Standard Time, and the date is 3rd of October 2024. The sentiment is pretty much mixed back across the board, starting with the FX section. A pound is the weakest currency currently, as we had the Bailey came out and gave his speech to the presser. And let me just bring those comments, just have those here. Bank of England here. Okay, and the Bailey. Yep. So let me just. Okay. So the Bailey came out and said the bank could be a bit more aggressive in cutting rates, provided the news that inflation continues to be good, in an interview with the Guardian. So with that being said, the pound is really facing headwinds after that speech, and it is currently down by 6%. Other than that, if we look at the major Antipodeans, Aussie, New Zealand is the second weakest currencies. USD leading the pack. Swiss franc, yen is also behind the dollar, but not that much. Moving to the equity section, pretty much mixed bag, not giving us a clear sign which way the risk is leaning towards. Hang Seng 50 down by -2%. UK 100 is up by 2%. It's close to 0%. It's not that off we can get any sign of the risk sentiment. Talking about commodities, natural gas and the oil is currently the star of the day, I guess. uh, Up natural gas plus 1%, and WTI almost 1%. Even though we had a commentary from Libya that they are going to open their refineries, and even though that news couldn't help to move a needle in the oil price section. Anyway, gold is stable. Copper is down by -2%. Now, here's the thing: US yields are up plus 0.7%. It clearly gives us a bias that there is a pretty much risk on environment in and if we look at just the bond market. So pretty much mixed bag if we look across the major asset classes, but if we go individually, then equity is not giving much of a bias, neither commodities nor FX section. However, if we just look at the bond market, it's just giving us some sort of a risk on environment here. Now with the economic calendar, let me just bring that up for you guys. So come on. Okay, so let me just go to 3rd of October. So we had services PMIs from Europe. Came a bit better, but not that much. We also had just had initial jobless claims coming out of US. 225k. Consensus was 220k. Wasn't convincing to get me in a trade, so we just stayed patient on it. Uh, Initial claims 4-week average stayed pretty much close to the prior data we had, and continuing jobless claims 1.826 million, and the prior was kind of same. So there wasn't anything we can go to trade for out of these events. The major events we're gonna be looking for is gonna be ISM, S&P Global, not the yeah, ISM services PMIs, these ones, and all of them. The major component I'm pretty much be focusing on is going to be employment index. We will see if it give us a nice push up close to 51 or maybe 52. However, uh, going for bad data is not something I'm looking for. Good data is I see as a low hanging fruit across this event. So with that being said, uh, the risk is pretty much a mixed bag across the board, and we are highly focused on labor market right now. If we get any data showing that the labor market is not falling off the cliff, give us a nice edge to trade that event, and we will also try to make it a swing trade out of a macro event trading day. So with that being said, you all have a great trading day, and if you have any questions, don't hesitate to let me know.